Suze Orman here. These are crazy times. You are scared to death, most likely. You don't know, should you be selling? Should you be buying? What should you be doing overall? And we are going to tell you. I've invited Keith Fitzgerald to join me again. So stay tuned so that you know to make the moves you need to make in these uncertain times. I'm getting thousands of emails from all of you saying, Suze, I don't know what to do. We're at war. Should I sell everything? I think I should get out of tech and get into defense. And today is really here to calm you down again, because as we speak, we are at war. Oil is skyrocketing. Tech is still something that all of you are scared of, and you need solid direction, in my opinion, when it comes to the financial markets. And truthfully, nobody, in my opinion, is better than that than Keith Fitzgerald, or as I call him, Fitzy. So, Keith, seriously, are these hard times? Are these times to be worried? Are these times for people to be selling? What are these times that are happening right now, in your opinion?
Well, I'd be lying if I didn't feel the angst too. I mean, I'm a father, I'm a husband, we're a military family. I mean, this stuff is for real. But the other thing to think about is that this is not our first rodeo, Suze. In fact, conflict like this, as upsetting as it actually is, sets the stage for what happens next. Even the fiercest fighting eventually stops. So the real problem right now with the markets is actually your emotions and the person looking out at you in the mirror. And that's the person you need to get under control, because the companies and the profits, they'll follow.
And if you were to go back, if you can, and look at all the wars, maybe not all of them, but a lot of the wars that have happened, after they were over, what did the markets do?
If we look back at 10 major conflicts over the last 35 years, there's some surprising data that shows up. And to the point about calm and not being our first rodeo, let this stuff sink in. If we look even at the horrific events of 9/11 in 2001, right? I mean, I lost friends that day like many people did. The worst attack in American history. Markets closed for 4 days. The SPY dropped 11.6% in a single week. And again, everybody said, wow, this is terrible. This is the end. But in fact, the markets bottomed on September 21st, and by December had recovered 21.2% from that low in just 10 weeks. And then if you go to 2003, right, the U.S. invaded Iraq. The market had already sold off 14.7% in the lead up, very similar to this. Fear had been priced in for months, but again, markets rallied 27% in the year that followed. And finally, if we go to 2020, where we had the Soleimani strike, markets barely moved. COVID came in afterwards, and the S&P 500 exploded 67% in the following few months. So the thing that you want to think about, and again, as uncomfortable and as disconcerting as this is, every investor who sells out now is making an emotional decision under the guise of being rational, when being rational is really what you want to do, because the numbers present something very, very different. The average recovery is 16%. History shows there has never, in recorded human history, been a war for which the markets have not come back.
We're seeing oil spike again. So, should people be buying oil, selling oil? What should they be doing at this point in time if they happen to own energy stocks, or they want to own energy stocks, in your opinion?
Well, that's a very important question, a very important distinction, because you don't want to chase oil for oil's sake. What you want to do is chase oil with great companies that produce it, store it, move it, and let it go around the world. So a company like Chevron, for example, which has a great dividend, it has balanced upside and downside distribution and production, meaning that it's not just the stuff coming out of the ground, it's how they process it, where it goes, who are they selling it to. A company like Chevron can make money at $30 a barrel, and it can make money at $100 a barrel.
So I'm going to put you on the spot here. I already know your answer, by the way. So if you were going to pick one energy company, oil company, people want to participate. They see it in the 80s. It's possible it will go, and probable it's going to go to 100. Would you be buying Chevron right here via a dollar cost averaging basis?
Without a doubt. I own plenty of it, and I hope to own a lot more because I like the same things we're talking about. I like stability, I like growth, I like being able to sleep at night, and most of all, I really like the dividend because that's cold hard cash. So to return to our earlier example, if you're investing in companies like this, you're never really out of cash. You've always got a dividend coming in, for example, and that can be reinvested in Chevron or even turned to other opportunities.
So all of you, here's what I really want you to get from this, especially with the oil companies and dividends. You have to look at a company not just at the yield it's giving you, okay? You look at the stock and go, oh my God, it's going to give me a 7% dividend. You have to make sure that the dividend is safe. You have to know, does the company itself have diversification within the company? So that if something happens in X, they still have Y to produce money for them, which is why I wanted to bring up this topic. Keith, would you go so far to say that if people have other oil companies right now and they see them going up, how do they check to make sure that they're not exposed to them going back down or danger again? What would you tell them at this point in time?
Well, that's an interesting question. Obviously everybody has very different positions. If you've held the stock for a long time and it's a legacy stock and it's working for you, then okay, that's fine. But if you're concerned about the company's longevity, like I am, for example, which is why I own only Chevron in the oil majors, you want to check three things. You want to check, where do they produce their oil? You want to check how much debt do they carry, because if they carry a lot of debt, that means their leverage, that means their break even is much, much higher, and they're subject to the price of the underlying oil shifting around. And finally, you want to look at management. Does management, and you'll get this from an annual report, you can do it in 20 minutes. Do you get the sense
Wait a minute. You just said you can get it from an annual report. Nobody knows where to get an annual report, Keith.
Let me
you
finish.
know where to get an annual report.
No. Hold on.
Right. Go on.
We got this great thing called the internet, right? So what I would encourage any investor who's concerned about this to do is forget the chat rooms, forget the ticker stuff. Just go right to the company. There's going to be a little section on their website that says Investor Relations. Pull up the most recent annual report. Read through it. Take 20 minutes, because annual reports will give you an instant snapshot of where the company is, and you will know really quickly whether the company walks the talk or talks the walk.
So for those of you that get afraid, an annual report, I have to do that. Can you just try it? Can you
Please.
just try doing it, reading a little bit about it? It's not as scary as you think. And how many times do I have to say to you, what happens to your money directly affects the quality of your life, not anybody else's life. So what we're trying to do here is not just tell you what to do. We're trying to educate you as to how to do it, how you can know for yourself, because especially on International Women's Day, all of you have to really own the power to control your destiny. And one of the ways that I want you to do it, Keith wants you to do it seriously, is to know where to go on your own to get the information that you need. Let's talk about defense for a second here. If you were going to give people a defense stock that you would feel comfortable in buying right now, because if you look at what's happened to many of them over the past week, they actually took a serious hit. Mm-hmm. Didn't you find it was funny that when we were bombing, we were doing all this stuff, and those stocks were going down and down and down? So if you were going to give them a defense stock, which one would it be?
Well, my favorite, bar none, is going to be Lockheed Martin because of the way the company operates. Again, if you look at the annual report and you just very simply, again, just simple. It doesn't have to be complicated. You don't have to spend more than 10 minutes doing it. But they make exactly the kind of technology that we need to defend this country, to prosecute the war. Whether we like it or not is moot. Again, I'm not a fan of this. I don't like what's going on. I would have handled this potentially very differently, but that's not my call. What is my call is to figure out how we get through this. And Lockheed Martin makes many of the defense systems that are integral to how this is going to get done and what's going to be needed to keep our country safe for a long time.
Thanks, Fitzy, for joining me. I love it so much. Now listen, everybody, if you like this, I want you to comment below if you want to see more of me and Keith so we can keep coming to you. But don't forget to like this video and subscribe. See you soon. Bye-bye.